And yeah, he's gonna be who I'm gonna lead off with today, because he was the one who surprisingly was not quite as optimistic about retail. Tony, you wanna get into that?
Well, you know, optimism is a funny thing because retail is always opaque and dynamic and changing. So is the economy, interest rates, demand, leasing rates. But one thing I'll say about Miami is that it's proven to be very durable. So as other states are receiving more challenges, Miami tends to be the life raft where a lot of flight capital or companies are coming. So
Tony, you want to hold your mic a little closer? Yeah.
So in neighborhoods like Wynwood or Design District or Midtown, we're actually keeping pace with development and still enjoying really low vacancy rates. So although retail is always challenged, I think every product type is, to me, as a broker, retail is still the best risk-adjusted returns in any asset class in commercial.
Yeah. Todd, you're pretty optimistic about retail these days. You want to explain why?
Sure. First of all, thank you very much for having me. It's interesting, having the ability to look back at retail over the past 25 years. We saw retail go down, we saw a lot of retailers go out, and we had the opportunity over the past bunch of years to see what retailers will survive and what new retailers will thrive. And that is part of the reason, I think, why, to Tony's point, retail is now resilient, because it has already gone through a major cycle. It has already gone through a big pushback from the online presence, the Amazon effect, and now we know who's capable of coexisting with your brick and mortar, who's going to be successful with it, and who's going to work with it. And I actually think, you know, spending a little time at LifeTime today is the best example of the type of experiential use that, ironically, my grandfather would have said is not what you would ever want 40 years ago in your shopping center. Restaurants and gyms were the two worst types of tenants you could have 30 years ago. Yeah. Today, it's all you want, and a little bit of soft goods.
Yeah, and it's a real shift. Bahram, you know, you're expanding these days. You were building, you know, $50 million fitness centers, but financing's tighter now. You know, there's more space availabilities. So you want to talk about that for a second? You're looking at taking over more existing spaces. What's that landscape kind of look like? Are there a lot of landlords looking for big users?
Yeah. Well, again, thank you for having me here. We are always developing. We have more than about 200 people actually in our real estate division, design, deal making, entitlement. So we're always in a process. At all times, we are buying chunks of land and we're building from ground up, which costs 50, sometimes 60. I'm just finishing one worth a little more than 110 million. At the same time, we're able to go look at other spaces, and if they're in the right area and we can change the space properly to deliver the experience that we're after, we will do any kind of deal that makes sense.
Mm-hmm. And who does the wooing? Does it depend on the market? If the landlords are wooing you or you're wooing the landlord, office property owners, what does that kind of look like in general?
It's a little bit of everything. One of the things about LifeTime that is misunderstood is everybody talks about gyms. LifeTime is not a gym. We work on creating an entirely experiential atmosphere of healthy living and healthy aging. It's an athletic country club. So we're not going to go to every place. We're not going to go to every mall. We're not going to go to every area, just very, very particular. So at all times, we are looking at roughly about 100 deals in our pipeline. Sometimes we're pursuing it. Sometimes we're being pursued.
Mm-hmm. And what, from your perspective, you know, do rents and build-outs and landlord incentives? I mean, and Tony can answer this, and Todd as well, but where are we at in terms of rents and occupancy level and build-outs? How much leverage does a tenant have versus the building owner these days?
The tenant's holding the cards a lot of times, especially if they have good credit and they add an amenity to the development. I think when someone's building a project, whether it's a town center, mixed use, an office tower, residential condo, if they're not incorporating something on the ground level or on the rooftop, it's kind of a miss. So if you're just building one product type, office, and you're not incorporating lifestyle, wellness, food and beverage, it's kind of a miss. So if you're not thinking holistically about the experience of whatever you're developing, whether it's a luxury condo, a lifestyle district, a high street neighborhood, you're not incorporating other amenities, you're not really developing something that's innovative or different.
Yeah.
Yeah, I was going to say, with respect to the landlord-tenant dynamic, it really, I think, number one, depends on the location. In some cases, you may have a great location that a tenant is dying to get into, right? And then in other situations, obviously, you're going to try to woo the tenant to make your location great, which is something that a Lifetime is capable of doing. The other thing right now, in light of capital markets, is the tenants definitely have more leverage, even in great locations, because without pre-leasing, with great credit, with great quality users, you can't get debt.
Yeah.
And so, that pendulum is definitely right now on the side of the tenant. But again, it still boils down to location.
What I'd like to add to that is that many times in life, we're chasing short sprints. Deal making is a short sprint. What you really need to do is develop your character as a company. You need to honor your relationships. And the most important thing is to make a commitment to create a win-win deal between you and your partner. So if I'm the landlord or if I'm the tenant, I should be committed to the success for both of us. This is why during COVID, many other people called me and said, we're not going to pay rent. I said, you do what's right for you. Lifetime paid every last penny of rent throughout the COVID. So that relationship allows us to work with the landlords in a different way.
And landlords don't forget that, I'm sure. I'm sure. And do you get your best deals? I mean, it sounds like it's all about activating the space, right? Either you got foot traffic already there and the space is activated, or your new location that's more remote, but you got to activate the space through some sort of, restaurant, fitness center, lifestyle center. Are you getting some of the most attractive deals on, say, new developments in far-flung areas, or where are landlords kind of wooing you the most?
So really what we do at Lifetime, we're a solution company. We can go look at a building that Todd has and see if we can add value by creating an experiential destination that will make the whole property work. And so at all times we are looking, with David Simon or Macerich, we go to the malls and maybe take down a Bloomingdale that hasn't been generating any traffic. We take that down, we build a facility that brings in 3,000 people a day with high income. So we like to partner with the real estate entities to figure out how we can create something that serves the customer, serves our landlord, and of course does the right thing for us.
Yeah, and I didn't mention earlier, the landlords you do work with, but David Simon is an investor, obviously Taubman, all Moyni and Macklow, all the big guys related. And I want to get into that kind of activating the space further. Todd and Tony, you guys mentioned that, town center retail is kind of the biggest layup in terms of retail. You want to explain why that's so attractive?
Yeah, I mean, when you think about a town center, what is it really? It's really, the place where you have all your services, you have all of your experiences, you work, you live. The idea of live, work, play, which people have been speaking about for a decade, maybe longer, has really, I think, become much more relevant post-COVID, when all of us had the opportunity to work from home, have the creature comforts of home, and ultimately figure out that you like having those things throughout the day, that flexibility, and you also want to make sure that you have a good experience when you're not at home. And so if you are going to go to an office, if you are going to go to retail, I think right now a lot of people are looking to the hearts of a town center or an urban environment where you have everything at your footsteps. And if you don't necessarily have it, I think as Tony said, you got to create it. You either need to put it in the building so that all the things that you enjoyed, the ability to go have a drink at the end of the day, the ability to go grab a meal at a restaurant that you enjoy, the ability to, jump in a pool and do some laps, those things are important more than ever post-COVID than I think prior.
And is that kind of the premise behind Sunday Village, which you're working on in Delray Beach? Tell us about that and, the tenant mix there and the financing and all that stuff.
Yeah, I mean...
Financing is fun these days.
I like the way you throw the financing at the end.
Snuck that in there.
I mean, the good news is we bought this piece of real estate. It's on a street that is all bars and restaurants, but historically has never had any office, and really was just more of an entertainment venue. And what has happened, again, post-COVID, is employers have now come to the realization that the only way to get their employees back to the office is by putting their headquarters and their offices in places where their employees are excited to go to work. And part of that, again, is the experience. So we're building 250,000 square feet, Class A office, campus-style environment, ground floor restaurants, right at the corner of Main and Main, adjacent to 100 restaurants and bars, and we are seeing incredible demand at a time when most of the country is shying away from office. We have people calling us and asking us if we have more space. So we're very fortunate. I would say there's a lot of luck and a little bit of smarts, but we're seeing the proof that this is the shift and the trend. Financing is hard. The good news is we are closing our construction loan even though we're half built. It's taken a lot longer, but the capital market environment is making everything challenging, even things that make incredible success. Incredible sense.
And that's what you're building is a pretty stable asset class.
70% pre-lease. 70% pre-lease to great credit, and still, it's just a difficult environment to get stuff done.
Yeah. Is there a science to activating the space? I mean, is there a data-driven approach to that in terms of, flow and getting people to work in different areas, or how, is it an architect's vision? How, nuts and bolts do you get in terms of the planning for that?
I was talking to Bahram a second ago.
Bahram can talk about that too, I'm sure.
I was talking to Bahram about that a second ago. People sometimes just think of real estate developers as guys who are just building buildings and you're just signing leases and it's all about capital and lease and plug and play. And the reality is we take a lot of pride in thinking long and hard about what our product looks like, how does that fit in with the environment, your neighbors, the location you're in. And then you look carefully and very logically at who are the tenants that are successful in the immediate area, what is missing from the market. What's great about this particular deal is that we're actually users as well. I'm going to move my office there. I don't live that far away, and I've been going to this area for a long time. And now I have the ability to say, we're missing this type of restaurant, let's focus on that. We're missing this type of product, let's focus on that. And there's too much of this, so I don't want to do that. Now, you don't always get the opportunity to cherry pick what you want, because in many cases you're forced to take what you get. But again, in this particular instance, I think we got lucky that we can curate the right mix based upon what we're seeing in the area.
Yeah. And Bahram, how data-driven is the approach when you're building out your spaces? I remember WeWork, not a good example probably, but they would track, their users, how many times they went to the coffee machine and how many times they were playing ping pong a day and whatnot. But is it a very scientific approach to how you use your spaces, and where does it bubble up through the architects? Does that bubble up through your own internal research department? What does it look like?
As I mentioned, we have a very large group of architects, designers. I'm still intimately involved with almost every square foot that we design. First, you have to think about your business from customer point of view. You have to design with the end user in mind, and you have to create maximum desirability. If you create the maximum desirability, you will get the most flexibility in your pricing and execution of your business. So everything matters. The layout matters, the flow matters, the geometry of the space, the color, the texture. So you have to think about all those details and make sure then the mathematics work and the deal works and the location works. But all of it play a role in the total picture.
Yeah. So we're talking about town centers. I want to go a little bit more glossy. Tony, who are the next hottest brands to come here? What is Miami missing? What is the next major food group? What is kind of exciting to you right now?
For me, what I think is exciting is something that you're not going to find online. So one of the things that I've enjoyed working in Wynwood for almost 18 years now is all the different craft and unique concepts that make a neighborhood special, right? So originally we were arguing whether or not Panther Coffee would work in Wynwood, and it was a brilliant success. And then you get tenants like Walk Race Vintage, Cars and Guitars, Zach the Baker. It adds a fabric to the neighborhood. So for me, it's not necessarily a new concept, but more of What excites me is creating a sense of place with well-curated tenants, whether it's a high street shopping district like the Miami Design District, or Wynwood, which has evolved from an art district to more lifestyle and entertainment. That's what I think is the next new concept. As far as the next new neighborhood in Miami, Little River is really something that is turning to be very special. Design districts hitting on all cylinders.
Yeah.
Wynwood is still surprising us and growing at a pace that is almost hard to keep up with.
Yeah. I mean, what do you think about Wynwood in general? I mean, is there going to be an oversupply, saturation? Like, where? I mean, there's cranes everywhere.
Well, we have 35 buildings under development right now in Wynwood, over
my God.
5,400 residential units, about 600,000 square feet of retail. But we're keeping pace with absorption, and so far everything is healthy. There's a lot more development in the pipeline, from hotels to restaurant, food and beverage driven concepts, hopefully a few gyms, you never know.
Yeah. How about Design District? You know, you're going to start to see vertical towers rise there and that sort of thing. What's kind of the next evolution of that neighborhood? I mean, 5 years ago it seemed like, was this thing going to work? And now it's obviously firing on all cylinders. Where's it, you think it's going?
So rents are getting to a point where they're starting to mature very rapidly. We're still forecasting enormous rent growth. The demand there is like nothing I've ever seen. I have people coming to find me to send leases, signing them before I even have a vacancy. The demand is really remarkable, and I think the reason for that is Miami has become one of the most important cities in the country. And if you're a retail brand and you're a luxury brand, you have two or three options, but in the urban core, the Design District is your only option. And they're building these amazing flagships, which are really, really powerful for the brand to communicate to their customers. So for me, that neighborhood is just off the charts.
Yeah.
What's the next phase of that? On the peripheral of the neighborhood, we're looking at large towers, office buildings. I've heard of some very high-end residential projects and hotels that are coming in. But that neighborhood is, by all accounts, one of the most successful high street districts in the country right now.
Yeah. Bahram, which neighborhoods are you in now? Which neighborhoods are you looking at next? What looks attractive to you in Miami? I know you guys are seeing a space after this talk.
Well, what we're looking for is the area that really has that momentum to the area. You have to catch it at the right time. If you wait too long, then you can't find the space to build the magic that you want to build. If you catch it at just the right time, you can get in and design. Why I'm most interested in right now is to partner with developers that have well-heeled and build the total village, the LifeTime village, which is LifeTime Living, LifeTime Work, LifeTime Athletic Country Club, Recovery. So it's one-stop shop, and that energy, I am so convinced that basically in every experience we have with it, it's going to work. It's going to endure tough market. It's going to endure good market. It's going to work either way.
Yeah.
So mostly what I'm looking for, creating extraordinary and the bigger picture.
And to back up from that, you know, you're building about a dozen co-working spaces now and 5 or 6 apartment buildings. So why the diversification away from retail? Just because you see it as this, you know, more experiential brand that can include development as well?
Yeah, so our company, we have about 1.5 million current members, but over the last 4 or 5 years, it's been 3-4 million members. And these members love LifeTime. They want to be connected to LifeTime. So when we build an apartment building in Vegas, we get tenants coming from around the country, which otherwise, if it was just a local operation, wouldn't find that. They also love the ability to work out, to get their work done. So the combination of our brand, our execution, and the convenience of the live, work, play. A lot of people have talked about live, work, play for the last 10 years, like Todd said. LifeTime actually executes live, work, play.
Yeah. So, I mean, yeah, right. In a lot of cases, you're working from an office building, and then you add in the fitness. You're working from the fitness back into the office building. That's an interesting concept. Go ahead, Ted.
By the way, I'm going to speak to that. You know, it's such a logical idea at the end of the day that so many people overlooked. When you're building an apartment building, you want to put amenities.
Yeah.
Most of the time your amenities are not revenue generating, okay? They actually hurt your pro forma. And so you try to keep them efficient, you try to keep them small, you try to make sure that you just have enough to capture enough renters and that you at least compete with your comp set on your rent per foot. But what Bahram will tell you is that when he puts LifeTime in there, number one, that is a revenue generator, okay? Number two, you're leasing at a much faster pace. Number three, you're leasing at a higher rent per foot because now you have an amenity package that is unparalleled to anything you've seen. And so, you know, I just had the benefit of touring his Coral Gables project, and it was really impressive what a traditional apartment tower could become when aligned with LifeTime.
Right. So one is, usually it's, fitness is the tail wagging the dog, but in this case it's the dog wagging the tail, or some analogy like that. But
symbiotic.
Exactly. But I mentioned on my earlier panel, you know, it's interesting seeing retail with this major food group branded tower that Terra is doing, where it's just branded right around the retail itself. Do you think that's a trend that has legs, Tony, or is it just kind of specific to that case?
That's the future of development. It's got to be purposeful and thoughtful. That's a certain brand of customer that wants that experience, that wants that restaurant dynamic where they live. There's other customer profiles that want health, wellness, well-being, tranquility. That's maybe more along the lines of a LifeTime. So I think there's different flavors of ice cream, there's different flavors of development, and they all appeal to a different customer profile.
Yeah.
By the way, I think a lot of that also has to do with, you know, the importance of social media as a marketing tool. So at the end of the day, the customers of major food group restaurants, for instance, they probably follow them on social media. Now all of a sudden, they have this huge following, this huge customer base, this huge database of high-paying customers. It becomes a very, again, logical relationship to now partner with a high-end condo developer. But I was mentioning cars, for instance.
Yeah, you're just starting with this marketing base, right?
Exactly.
This list of prospects. Bahram, you want to talk about traditional malls and what you're doing there across the country? I mean, that seems like the one retail asset class that's just kind of a bit of a disaster, right? So you're coming in wholesale and anchor tenant in some cases, or you want to talk us about some of the Simon properties and that sort of thing?
Yeah, this actually started 2015 when we heard there's like 800 big boxes are going out, and it seemed like a crisis, but in fact was an opportunity, not just for us, but also for the mall owners. When you look at the regional malls, they're generally about 100 acres of land with lots of opportunity. They have maximum zoning, they can build whatever they want, they have ring road, they got good locations. But the buildings are 40 years old and they're obsolete. So instead of 1 million, 3 million, 4 million, 5 square feet of purely retail, what you want to convert that to is 3 million, 4 million square feet of live, work, play. You want to make sure that asset lives and breathes 24 hours a day, 7 days a week. And so when you look at United States from 40 years back coming forward, initially we started building massive properties for just office, you know, resi, shopping centers, and industrial. And then you had to drive your 8-cylinder cars between all those. And what we're really seeing today is that the customer's life is not 8 hours of work and then go home. It's all mingled together for all of us. Our whole day is mingled together. And so the concept of creating an environment that is alive and living at all times. And it comes to branding. One of the things is the most underappreciated in real estate is brand. Whether if it's Lululemon or Tommy Hilfiger or Polo, they understand the brand. They understand that if they build a brand that is totally coveted, they can sell their goods. In real estate, there are millions and millions of apartments, but they don't have any identity. So the opportunity, same thing with workspace. So what I wanted to do is I wanted to build a LifeTime brand over the last 30 years and then expand that brand when the customer trusts it, knows what the experience is going to be, bring it into the combination of those things. So with the malls, we're able to go in, take out one of those failed retail places, take it out, build a brand new 100, 120,000 square feet, a beach club of 40, 50,000 square feet. It's everything health and well-being. These facilities bring in roughly about 3,000 people a day with a median household income that is 1.5, 1.6, 1.7 times the general area's median household income. So that becomes the ultimate anchor to revitalize the mall. It's the first phase of transitioning from just retail to a live-work play.
Yeah. How far in that process are we? I mean, how many of the outdated malls have been converted at this point, or is still a long way to go?
I've done at least 10 or more that is already open with just David Simon. We have at least 10 or 15 more in the pipeline. I have done many with Macerich, many with Brookfield. So we are always in the process of looking, finding those opportunities where we can transform the real estate into a better place for the community, better for the landlord, and of course provide the opportunity for us to build our business.
Yeah. And of course, that's coming into an existing property. I want to talk about investment sales for a second, which gets back to the whole financing issue. But Tony, you put out a report that investment sales are down some like 80% year over year in Greater Miami. That includes retail. But what are you seeing in terms of people getting financing for retail purchases, or, you know, Bahram, I know you're not as focused on ground up development right now, but what are you guys seeing on the financing front? And Bahram, I know you were talking about what you think the hard landing that's going to come is. That would be interesting to hear.
There is not financing for commercial real estate right now, or if it is, it's very punitive, low loan to value, higher interest rate. Our permanent financing now is what bridge rates were 3 years ago. So today, I have a saying: if it's cash, it doesn't crash. So there's a lot of opportunistic purchases being made right now, usually on an all-cash basis. Our firm, as an example, in the last 60 days or so, have closed on over $100 million worth of all-cash transactions from capital sources from all over the world, from Switzerland, Munich, Turkey, some expats from New York bringing 1031 capital down to Miami. So as an example, in retail, we're still seeing really, really good risk-adjusted returns in the 6 to 7% cap rate range. There's negative leverage for sure, but I think the market is willing to accept that or pay cash for the best real estate.
Yeah.
So we always tell our clients, focus on the best corners, the best buildings, the best neighborhoods, and go long, especially in a city like Miami.
Yeah, you got the long-term outlook.
We're still forecasting rent growth. Despite the capital markets, the investment activity is accelerating. People have nowhere else to put their money. Capital that would have gone to New York, that would have gone to California, that would have gone to Chicago, or that's leaving other countries, is coming to Florida. And then when you zoom into Florida, there's a few key submarkets that you like, maybe Palm Beach, Broward. And when you look at Dade, Miami is the center. We're in the Super Bowl of real estate today at the Real Deal Conference. We're in Wynwood. It's probably one of the most exciting submarkets in the country. So keeping up with it is proven to be a challenge. And if capital markets get fixed, it's going to be a runaway train.
Bahram, you want to talk about that hard landing you were explaining to me?
Well, I think that first I want to talk about good news.
Yeah.
All hard times will create good times, and all good times will create hard times. It's just the cycles we go through. We have enjoyed a low interest rate environment for a very long time. The movement from 0 to 5% in a year and a half is the first time in the history of our country. It's caught everybody off guard. But my prediction is that the interest rates will go down just as fast as they come up, maybe even faster. So what it's going to cause is, because of what just Tony said, it's a negative leverage. So you can't really do deals using financing unless you have the cash to buy something at an opportunistic price right now. So it's going to make those deals smaller. I'm sure a lot of the engineering firms, architectural firms, they're slower right now because all these deals that we talk about, we can talk about them, but you're not going to want to start them in this environment, but maybe in about 12 months you will. So I think it's just a matter of time before this thing. But hard landing, we've got a consumer that is running out of cash. Again, You guys are all isolated here in Florida. You have a bubble of your own.
Yeah.
There's so much momentum that comes from other states here. But if you look at the country as a whole, you have a convergence of 2-3 things. Student loans paying back. People are out of their savings and they are out of their room on their credit card. The interest rates are high. There's a lot of activities like mortgage businesses, architectural firms, selling homes. It's all slowed down significantly. So that trickled down in the economy. So I expect actually a harder landing in the first half of next year than everybody talks about the soft landing. But it's not the end of the world. It's just going to happen. That's going to force the Feds to start lowering the interest rates and the cycle restarts. So you just stay focused, keep your feet moving, and everything's going to work.
Yeah, but it sounds like it's a great opportunity right now for cash in Miami next, 18 to 24 months or something like that.
Yeah, I was going to say, it's a double whammy. You have the higher interest rates, and then historically, you would see spreads come down. The problem is there's such a small amount of liquidity in the market that spreads have widened, and that sitting on top of a wider spread on the index results in an extremely expensive debt piece. And the only types of deals that'll work with debt right now are highly transitional or major value add upside where you can afford that cost to capital because you're adding so much NOI to something. But I do think that there needs to be some change. Otherwise, we are going to definitely see pain, even in our market. The reality is so much of the investment and development that occurs here still relies on capital from outside of the market. Not everyone's a cash buyer.
Yeah.
The private equity, limited partners of the world, every one of them has become a debt fund. So they're all trying to put really expensive senior paper out, which is killing models and killing deals.
Right.
And so something's got to give. Either they're not going to be putting money out, deals are going to be coming off the table, you have a few cash buyers. I'm trying to look at deals on an unlevered basis. If they can pencil on an unlevered basis, then that's pretty good, but it still has to be the right risk-adjusted yield.
Yeah.
But no one's exempt from what's happening in the country right now, and it's just making everything harder. But that also is the time when there's great opportunities if you can get stuff done.
Yeah. Well, that's the big question. And Tony, I want to ask you, you're a broker, asking us in every panel today. So there was the recent decision about commissions from the National Association of Realtors lawsuit, kind of decoupling the buyer and seller commissions. What effect do you think it's going to have on the brokerage industry? Does it? And are you an R member, or no? You're outside of it from commercial.
I don't use the MLS, but I think that was a litigation attorney leveraging on the requirement of the MLS to put a buyer's broker's fee. But at the end of the day, I think it's going to have absolutely zero effect on our industry. Sellers are going to offer co-brokers fees. The brokers in this room, we all cooperate with each other. At the end of the day, it's a market function, and leave it to attorneys to create a class action lawsuit. So we'll figure out a way to adapt and overcome, and I'm not worried about it at all. We'll always pay co-brokers. It's part of the way the business functions. You can't have a market discovery process without two sides of a deal. So
it's going to make a lot of lawyers a lot of money.
Well, maybe.
Yeah. Well, it seems like there's these existential challenges to broker commissions, like we were talking about before, every couple of years.
It's a never-ending story. Everybody thinks brokers make too much, but they forget how hard we work. It's not an easy career, but there's a lot of reward. You just got to really put your head down and work hard. So I think every broker deserves to be paid and be paid well.
Yeah. Where are commissions trending on the commercial side of things these days?
Well, it depends, right? How big is the deal? If it's a $60 million office tower, you can have a reasonable fee. But if the seller really needs to get out of the deal and they want you to put your full focus and lean into the disposition, they'll pay you very well.
But it's been going up in general recently, or what's been?
In this environment, we're seeing our fees actually go up. The more competitive it is, the easier it is to lease or sell, the more your fees tend to get squeezed because things are happening faster. But the harder we have to work, the more we have to backstop our efforts, the more we need to charge.
Yeah. I want to ask one last question for you guys. You're all, business owners yourself, founders. As a business these days, how are you approaching things? Are you cautiously optimistic in belt-tightening mode? How do you run your own internal operations?
We're growing and hiring. We're actually very excited. it's kind of counterintuitive, but the worst markets are where the best deals happen. And due to capital markets, there's a lot of forced sales. So assets that would have never sold before, they just would have refinanced or under duress and have to be sold. So if you're shopping and you want to invest in Miami, now is probably a once-in-a-lifetime opportunity to get in at prices and values that you're probably not going to see once things normalize. So we're anticipating a lot more transactions. We're scaling, we're growing, we're leaning into it, and you can't be afraid of the cycle. You just have to adapt and design your business for it.
Yeah, so you think 2024 is going to be a pretty active year for you guys?
So far, we're busier than we've ever been.
Yeah. I have the lending panel coming up later, and one of the people on there was telling me before, you know, they saw $20 billion in deals they reviewed 2022, $40 billion in deals they're reviewing this year. They still don't pencil out, but next year, that's going to be when, like, there's stuff happening.
It's an evolving process.
Yeah.
It's dynamic, but you just got to be in the game.
Yeah. All right. How about you guys? How are you approaching your own internal?
So again, looking back at history, in prior, call it financial downturns, is when we were able to make our best deals. Again, it was scary, but as Bahram said, it's a cycle, right? And as an environment, we always figure out how to work through that cycle, how to fix things eventually. That's just the nature of who we are. And so you just can't be scared. You kind of have to put earmuffs on, not listen to the noise, and you know, focus on fundamentals and go out there and take advantage of a good opportunity, and then just do your job. And if you could do your job, then you should be successful.
We are seeing more opportunity now. We have easily capability of growing the company in double digits in next year, the year after. As both of my friends here said, we're seeing way more opportunities right now, and we're just balancing. The company generates north of $300 million of free cash flow per year, so we're just using that cash flow to grow for right now until the real estate, the financing world comes back to the other side. Then you start thinking about leverage. But I see it as adapting and changing and taking advantage of opportunity in just a different way.
Yeah. Well, you guys make money off workouts, and you might make money off workouts as well.
Yep.
But last question, because I know you guys have to go. You don't have to tell me the specific property, but what neighborhood are you going to see something?
I really can't speak to that, to be honest.
Well, it's really close to the vest.
We're going to Miami Beach.
Okay. All right. Okay. Well, I hope you find what you're looking for, and I want to thank these guys. And stay tuned for our next panel. We'll be on in 2-3 minutes.
Plug is recognized as part of the NEC, the National Electrical Code, determining electrical safety protocols and code nationally. Since 2017, SkyPlug's technology has been listed multiple times in the NEC codebooks. SkyPlug's technology is also endorsed by the IAEI, the International Association of Electrical Inspectors, and mentioned in multiple publications, acknowledging the safety and usability that its technology brings to the electrical profession. Integrated with the newest technologies and platforms, SkyPlug Smart is the new plug-and-play standard for smart and safe lighting connectivity. SkyPlug's technology takes only seconds to install. The SkyPlug Smart is integrated with all the smart features, including phone control, scheduling, dimming, voice control, working with Siri, Alexa, Google, Cortana, and SmartThings. Eco mode, emergency light, night light, color changing light.
All right. Keep your seats, folks. We are about to dive into one of the most interesting, most exciting asset classes right now, I think, in the multifamily sector. So please join me in welcoming our Residential Bureau Chief, Catherine Kalergis, back to the stage, along with our panelists. All you.